How do you fish on ice?
It's a little more complicated than fishing on unfrozen bodies of water. But it's fairly simple. You find a frozen body of water that has enough ice to walk on and not fall through the ice, which is a very real danger. And you walk out on the ice with all of your equipment, and you have a hand drill, or if you're really into it, you have a electric drill, and you drill a hole down through the ice and pull out your fishing rod and, dangle your bait down there and wait for a fish to come. It can get much more complex than that if you're really into it, and I could talk for hours about it, but that is absolutely my passion. I love catching fish through the ice in the winter.
I don't know. I was expecting, well, first of all, you need to make sure that the body of water, the frozen body of water, is actually frozen, and you throw, I don't know. How do you check, actually? I'm sure that there are so many enthusiasts about this stuff. That's their hobby. So are there websites that tell you the thickness and how sturdy the ice is? How do you test it?
Yeah, there are on, there's websites out there that track the, some of the bigger lakes and whatnot, but, they always say no ice is safe ice. There's always that danger. So yeah, you just you work your way out and drill holes as you go and check the hole, every 20, 30 yards and make sure that, that you still have, a good 2-3 inches of ice and, or more.
Oh, is that enough?
Try to stay dry.
Now, how big, fish are we talking about?
I mean, it depends. If you wanted to come up to northern Michigan and fish through the ice with me, we would catch very large fish. I have no doubt. So,
first of all, I'll stick to warm weather at this time of the year. So it's not that I don't like the cold. I just prefer the steady 76, 77, 78 is too hot for me. 60s are too cold for me. I'll stick to my California acid natural habitat. But, okay, let's move on to something a little bit more serious, Curtis. First of all, thank you very much for joining me. How are you doing nowadays? Everything is good?
Everything is fantastic. Everything is fantastic.
Listen, I've been following your videos. Everyone knows you as the rapper from ITC, but that's not what actually makes you famous. Most definitely, very talented on that part. Can you give our audience a little bit of background? What do you do, and what is the National Insurance Inspection? I'm missing another
services on the end.
Services. Thank you.
There you go. Yeah, no, I appreciate the invite. And National Insurance Inspection Services traditionally was a loss control field underwriting inspection firm, and we focused on P&C, residential, personal lines, property inspections for underwriting specifically. So we don't do anything on the claim side. All of our work is focused on, mostly post-bind inspections for insurance carriers, right? So we work with, 20 plus insurance carriers and MGAs around the country, have a network of independent contractor inspectors, and that's what we've done for the last 2 decades. The more interesting thing, more on the InsureTech space, is kind of I wouldn't say a pivot, but a transition that we've been making over the last 5 years. And we've built our own proprietary self-inspection app, and that removes an inspector from the process and instead places the ability to complete that inspection in the hand of a policyholder on a mobile device. And so we've been doing that for a little over 5 years now, and it was a slow grind in the beginning. We were kind of one of the first companies that was really pushing in that direction, and so that first couple years was slow going. Nobody wants to be the early adopter, right? Everybody wants to see data, but you don't have data until you have users. So, but then COVID hit, and that was absolute rocket fuel, right? All of a sudden, carriers can no longer send inspectors into people's houses and on their property because of all the COVID restrictions. And so that was just absolute rocket fuel. And all of the carriers that I had been pitching self-inspection to for, the previous 18 months, they all came banging the door down and saying, hey, we need this now. And so, since that time, it has just continued to scale, and, kind of moving out of COVID, knock on wood, if we're allowed to say that, post-COVID world, that momentum has just continued, and, no carriers are backpedaling on it, and saying, hey, we did this for COVID, but we're going to go back to the way that things were before, right? We've not had a single client or carrier partner yet that has backpedaled on it and said, no, we're not going to do self-inspections now. So, it's been really, really good. And there's just, a ton of value that it provides on the underwriting side of the house. So it's been exciting to see.
And your main focus is on the personal lines, right? No commercial.
Yeah. Our focus up to this point has been personal lines. That's what we've done historically. That's what we know. We're experts in that field. And, obviously I'm biased, but I think that we're the best in that. And we've tried not to get distracted by other opportunities. There's plenty of opportunities out there and other use cases. And we may get to some of those eventually when it makes sense, but there's plenty of bandwidth and opportunity for us now, just on the personal lines with residential. And quite frankly, it's the easiest and best use case and fit for the technology. Right now. And so it's kind of the lowest hanging fruit. And, we have 17 carrier partners and MGAs that are on our platform now utilizing it. We're processing, over 30,000 self-inspections a month. So it's growing quickly, and we still have lots more room to grow. So.
Yeah, I'm very curious about why just underwriting, because in claims there is so much money. But before I jump to that, I'm just kind of doing a mental note here. Why not commercial? What's the big gap? I know that you're an expert in personal, but what's the gap to jump to do commercial?
Yeah, there's not really a huge jump, and we've had some conversations, with some carriers specifically on the smaller commercial side, right? But the nature of those commercial risks is generally significantly more complex and varied versus personal lines side, right? Mm-hmm. So, on the personal lines, everything is fairly well standardized, right? If you're talking about, a single family dwelling, there's not going to be a ton of variables there that have to be accounted for, right? And so we can pretty easily have a standardized set of questions, a standardized set of photo requirements. But as soon as you get into the commercial, now you have, a million different risk factors for a million different classes, of businesses and those types of things. And so it gets more complex, right? That's not to say that it couldn't work and wouldn't work. And there are some other self-inspection vendors out there that are doing some pretty cool things in the commercial space. But again, we haven't gone that direction yet. And like I said, we've got lots and lots of room and opportunity to grow on the personal line side with what we're doing now. So that's what we're focused on, at this moment.
So, going back to kind of the claims versus underwriting, most of the folks that we see, it's about claims, or the beginning and we can bring the first kind of InsureTechs, we go look, drop in, and a few others that try to solve it from kind of a gig economy style of approach. Part of it was, I'm going to send an adjuster, another one, I'm just going to send a drone or an operator or something like that. Part of it was also the self-inspection. And they were focusing mainly on claims. What's the big difference? Why claim is so attractive and you're hitting the underwriting? What's the mode?
Yeah, it's a really good question. I mean, I think that on the claim side, it may be more attractive to InsureTechs just because there is a lot more dollars, flowing through that side of the house. And historically, just to give some context there, right? Because I think a lot of people are not aware of, specifically on PL underwriting, right? Carriers for decades have ordered underwriting inspections from, any number of inspection vendors, right? There's, quite a few property inspection vendors around the country, probably 7 or 8 kind of, larger firms, right? That probably handle 80% of the, the inspections around the country. And then, dozens and dozens of small, single state operations, or even smaller than that, right? But on the PL side, these property inspections historically have been done for, very low, a very low budget, right? Like that's what carriers have become used to, right? And a lot of them these are very cursory inspections, right? It's more of a drive-by type thing, right? Snap a few photos, maybe look for any specific underwriting risks or hazards. But it's a very cursory exterior only inspection. And, carriers are doing millions of these a year around the country. And, they're used to paying, $50 or less for these, right? That's just kind of the cost structure that where that world has worked for decades.
Are they still doing that? Are they still doing that?
Absolutely.
Because well, Google Street View kind of covers that part at this point.
Yeah,
no?
and there is a fair amount of that happening, right? Where, carriers are kind of leaning in that direction, and or they're, utilizing any of a number of vendors that are doing cool stuff with satellite imagery, right? Or, all of that. And, we could go down the list and name all the vendors. There's been plenty of activity and excitement in that space
We'll touch it.
Over the last couple of years, right? But, there are drawbacks to that, right? Like that is not a holistic solution. And I don't want to get into all of the factors there, right? But I guess not to get off track. The reality is, carriers have been used to getting these field inspections done, having a third-party vendor send an inspector out to a property, and they're used to paying less than $50 for that, right? Whereas you move over to the claims side, and even if you're working with, with a third-party adjusting firm, right? Like, carriers are, they're not going to get a physical adjuster out to a property, for less than a couple $100, right? Like that's what they're used to paying. So there's this big kind of financial disparity between, what claims is paying to send a physical body out to a property versus what underwriting has done historically. And so the pressure that has caused, especially over the last 5 years, certainly through COVID and now beyond, with inflation and labor workforce issues and whatnot, all of that is creating immense pressure on the underwriting side because, quite frankly, the economics just don't work anymore for inspection firms, right? Inspectors are not willing to drive out to a property and snap a few photos, for 15 or $20 anymore, right? Understandably, fuel prices, everything, right?
No, especially here in California, forget it.
Yeah.
I have a friend that keeps teasing me about, he's like, every time, he's like, this is how much it cost me a gallon in Texas. I'm like, it's like almost more than twice what I pay here. Yeah.
Yeah, absolutely. So that, because of that, that has put a lot of pressure on inspection firms and in turn on underwriting departments, who are utilizing those services and have utilized those services historically. So, that as well has really helped accelerate the concept of self-inspection, right? Because, now we're moving away from, sending an inspector out to a property. Let's just send a link to a policyholder. They can take the same photos that an inspector would have taken. Let's provide them clear instructions on what's expected. And quite frankly, we very often we see better quality photos coming from policyholders than we do from from third-party inspectors, right? So there's a lot of benefits to it, and it is absolutely helping ease that financial tension and pressure. So anyway, that's a long-winded answer. Getting back to the difference between the claims and the underwriting side. Yeah.
Well, I think that there is a little bit more than that. A few years ago, I had an interesting conversation with Bill Van Jura about that stuff, and he's back in the day, or still is. I'm not really sure because each career has a little bit of different underwriting rules. An agent had a mandatory to go and check the property, right? You can send an adjuster, you can send someone, another inspector, but part of the whole concept of relying on the agents and the brokers is that they actually saw the property that they are insuring in person or by proxy or under something, someone who is their agent. Yep. And now with the direct digital, you have no idea if the asset actually exists or it doesn't exist. And there was a point that also I remember till today, it was how can I make sure that the risk hasn't changed, right? If we are talking about personal lines, okay, by the way, they added a trampoline. They had a little bit of work and the fuse box is a little bit changed. There are a little bit of other things there. I think that in one of your clips was that with all kinds of extra wiring for a marijuana indoor greenhouse kind of a thing, which was brilliant. I was like, yes, so happy that I do my homework so we can talk about that. Other crazy stories that you part of your underwriting process you found?
Oh yeah, I mean it's crazy. We again looking at tens of thousands of properties, every month, and all of that being said, and that one example I shared was, there's dozens and dozens and dozens and dozens of those, but it's kind of a joke with us internally. But just when you think you've seen it all, right? The the human condition proves that somebody will take it one step further and do something that you never in a million years would have imagined. But we came across one a few months ago. I'll probably share it on LinkedIn sometime soon, but old 2-story Victorian house, and the policyholder homeowner had constructed a zip line from a 2nd-story window that went down to a trampoline, and then next to the trampoline was the pool.
A pool.
So you could ride the zip line down, cool, drop onto the trampoline, and then bounce into the pool. So,
I can see myself doing it. Not structuring the zip line, but actually going with the zip line, bouncing. Well, if my knees will allow me, but yes.
Yeah, human ingenuity in concocting new risk factors that maybe should never exist. That ingenuity is endless. So while that certainly looked like a lot of fun, the underwriter in me cringed at the additional liability.
Oh yeah,
that certainly was not actuarially accounted for.
Oh yeah, no, I'm sure. Well, just 2 steps back so we can move forward. When I think about kind of the business cycle and why underwriting is a little bit neglected, which is your opportunity, of course, especially with 2-3 decades of business of understanding the underwriting and the inspections. It's that claims, you have the result almost immediately. The gratification and closing the loop from ROI. So for that business unit to understand what's the ROI on that specific project is very fast. Here is a technology. Let's implement the technology. Voila, we saved this amount, the X amount of percentage. While underwriting, it will take years to see the impact on the loss ratio or the combined ratio or anything that goes with that. So yeah, it's a business cycle in insurance is not simple. And I'm sure that you see that from your side in terms of sales and adopting new technologies and services.
Yeah, no, absolutely. And that's, you bring up a really, really good point that I talk about often. And that is, on the underwriting side of the house, adjustments that you make to your underwriting processes, guidelines, etc. Yeah, you don't get, you don't know the actual impact for years, right? You don't know how that's going to ultimately affect your loss ratios, and that's concerning to me. And I think this is my personal opinion. There are a lot of different factors going on right now with hard market in general, and I think a lot of unique factors that have never been an impact or never been at play before. So this current hard market cycle is very unique. There is this unique confluence of factors that have never been combined before in past cycles. But I think that, with changes to underwriting and as underwriting departments are adopting new technologies, I definitely have some concerns around, some of the hype with some InsureTech technologies, where, a lot of marketing, is happening, and a lot of, bright shiny objects and flashy this and that.
No,
And I'm concerned with some of those technologies that, that are not, they're touting a more comprehensive and holistic solution than they really provide. Inside of that, I understand that I am very biased, right? There's a self-preservation bias built in because of the business that I'm in.
of course.
But there are some very practical points that I think cannot be ignored when you're talking about. You mentioned it earlier, right? Like, hey, why don't carriers just use Google Street View, right? They can get a view of, probably 95% of properties, certainly on the personal line side. But the reality is, like, as soon as you go down that road, you realize very quickly that, the vast majority of Google Street View imagery is at least 12 months old. In a lot of
So,
places, it's 2,
mhm.
3, 4, sometimes 5 years old, right? And that's not actionable data. You cannot confidently make accurate underwriting decisions based on imagery that's 12 months old versus 3 years old. Or quite frankly, even when you dive into satellite and aerial imagery, and there are very cool things being done with that, right? And I do not discredit any of the companies that are working in that space, because I think they're doing fantastic work and provide a lot of value. But I posted about this on LinkedIn a few months ago. I do think that there is some danger there in adopting that as a holistic solution and saying, hey, we do all of our underwriting now just, based on satellite and aerial imagery, right?
So I
There
love
are
that
some
you're touching.
big holes in that logic.
I love that you're touching that topic because at ITC this year in Vegas, they mark it by avenues and streets, and there was like an avenue of all the satellite geospatial information. And it was very interesting to see you have the satellite, you have the aerial photography, then you have like in between kind of the drones, and then you have the street view. And each one of them tried to be a little bit different. Most of them were very, very similar solutions from, oh, we gather the information from NASA and a couple of other main providers. Not too much in terms of unique data source, but it's more about this is our analytics or computer vision extra things that we can provide value. Hardly none of them touched inside the house, which
Mm-hmm.
that's kind of your self-inspection technology advantage. And of course you have, and there is the freezer. So it's a question of, let's call it fresh data instead of the stale of Google Maps. You have relevancy, and what type of insights can you get, especially in terms of risk and hazards, that you can bring out in scale. Because if you're doing underwriting, you need to pick one by one. the cost of it's insane. As you said, you will need to send someone there, and that will be hundreds of dollars just for the underwriting. And if you're not underwriting, it's even harder. So when you're looking on all of these technologies, what do you think they are missing in terms of data points, or what they are actually providing extra? Because a few of them started to shift towards a cat and a little bit of commercial, and all kinds of different combinations.
Yeah, no, it's been fascinating to watch that evolution. And, again, I stated it again, but I can't stress enough that, I think that there are fantastic use cases, for a lot of these companies. I think the analytics that they're providing, can provide a lot of value, especially, especially around a high level analysis of a book of business. But again, I cringe when I see, any of them, talking about, property level insight, right? Which is a term that's gotten thrown around a lot. And just because, again, yes, you can look at that satellite image or aerial image, right, from fixed wing aircraft and say that, yes, that structure is there, right? It exists. Perfect. That's a data point. Then that's valuable, right? We know that this dwelling that we're insuring exists. I think that the technology is absolutely evolving and getting better and better in terms of the hardware that's being used to capture that imagery. With higher resolution, and the higher resolution you have, the more accurate the computer vision can be in terms of determining a roofing material or roofing condition and those types of things. So I think there's a ton of value to be extracted there. But again, there are a lot of other risk factors. There are a lot of other pieces of the puzzle that are completely unaccounted for and cannot be accounted for, right? So again, there's a couple different angles of that are concerning to me, just in terms of, in terms of a carrier looking at that as a holistic solution, right? Is it a solution? Yes, absolutely. Can you derive value from that? Yes, absolutely. But if you go 100% all in on that and forget about, all of the other risk factors, that's a problem. And again, to your point that you made earlier, I think that, the danger there is that, you can go all in on that, and you're not going to know that you made a mistake, for 2, 3, 4, 5 years. And then the tail of that loss ratio is going to swing around and catch back up with you. So, I guess not to belabor the point there, but I do know that, some of the biggest things that, I kind of cringe at are, when you're using satellite imagery or any of that imagery that, is just, it doesn't matter if it's a month old or if it's 6 months old, right? And a lot of it's getting better, right? The recency, especially in urban areas, a lot of these companies are gathering, imagery, every couple months or whatever the case may be. As soon as you get out into more rural areas, it's much less frequent. And now you're talking about imagery that's, 3 months or 6 months old or older. But a lot of these risk factors are very fluid, right? Extremely fluid. And so,
it's, I think I can see how they provide a lot of, if they are focusing, we are just reiterating on the same topic, but there's a lot of value from high level. And this is where, from top, angle, street view, and inside, each one needs to have a certain cover. And it's always a question, how do you take that at scale and provide answer to the different things? So we see more flood, we see more catastrophes, and we see different things that decision making in the billions of dollars in the reinsurance and government need to be taken. And then on the insurance, the regional, even the broker needs to understand, hey, I have a few policyholders in that zip code, right? It's not just the local agent with a front shop down the road. That's, he most likely knows all of his policy holders. But people are now doing a little bit outside of their zip code, thanks to the internet in the past, I don't know, almost 24, 25 years since the first internet bubble.
Yep.
I'll put a pin into ITC because we are running out of time. We'll go back to you, and then I'll be more than happy to talk about your other career as an ITC rapper or InsureTech rapper. But I really wanted to talk about your business and NIIS, and especially when it comes to all the business, as you see the InsureTechs and all that stuff. Your company, you've been around for 20, 30 years, right? You know what you're doing. You look at all the different technologies, you built your own technology. So, and when I look at the different startups, they're always going after the big names because they need that recognition, the trust. They need that, oh yeah, nationwide, farmers is using us. You should use us as well. Sometimes for good reasons, sometimes, yeah, but they have the budget for innovation. So they are going to do a pilot. It will take you 200 years to get the pilot, but most of them are getting better and better at running the pilot, and the understanding that if they don't give enough attention, that startup will die before it will propel to the next orbit in space, and from there to the moon, from the moon to Mars or whatever. You have that experience. You build your own technology, and you're working not only with big names, but I assume that you're working with other type of MGAs, regional carriers. How's the work? Because you are in a point of extreme growth. So how's the difference? What are the needs in terms of working with different companies that you're working with?
Yeah, it's a great question. And I think, our experience has been interesting, and I don't,
No need to name names.
No. But you're absolutely correct. I mean, we're across the gamut now, right? We have 2 of the top 10 carriers that are, fully integrated with our self-inspection platform. And that certainly is maybe a bit validating for us, internally. And to your point, it feels good to know that, some of these large carriers have, chosen to trust us with, to be a technology partner for them. But we also work with a lot of smaller MGAs and quote unquote smaller regional carriers, right? I think that, for many InsureTech startups, and you kind of referenced it, but I think focusing on, those big players, those big fish, can certainly be a detriment, right? Because the reality is the insurance ecosystem, and regardless of where you're working, in the greater ecosystem, whether it's, property and casualty or L&H or whatever the case may be, the insurance industry and ecosystem is massive. And there is so much opportunity, to make a legitimate impact, to generate very, very significant revenue, outside of the top 50 insurance companies, right? Go from number 51 to number 200, and there is still boatloads of opportunity there, right? And while those, smaller names may not be a feather in your cap per se, or may not be perceived as that. A lot of time, I mean, with startups, revenue, right? You need revenue. you need money coming in the door. And that money is absolutely out there. It's not only in the top 50 insurance companies, right? And I kind of laugh. It's kind of a joke with us internally, but for the last 2 decades, when I'm just looking at our revenue, and over 50% of our revenue historically has come from smaller insurance carriers and MGAs that quite literally 99% of the country has never heard of, right? But you can have a small regional carrier that's spending tens of millions of dollars a year on underwriting, right? Or whatever area of business and solution that you're focused on. So, yeah, it's very, very interesting. It's certainly fun to have partnerships with large carriers, but there's opportunity across the ecosystem, and that's something that we've experienced, and it's exciting. There's limitless opportunity out there, and I think if you have a solid solution that really adds value, get it out there and talk to anyone and everyone, and don't just focus on the big players, because to your point, those are long implementation cycles. If you can get the right contacts and talk to the right people and get your foot in the door, I
would say that I'll give them credit.
Yeah.
I'll give them credit that they started to move faster. They understand the limitation of working with the early stage, also with the later stage. Is the same thing with working with other new technology. While the earlier startups has a certain risk, but then they have a certain reward going with a company, and they have the influence to be a design partner and stuff like that. So there are different advantages there.
Yep.
So as we are kind of reaching the end of our conversation, I really want to go back and talk about your ITC rep, right? So it's a tradition now. How did you get into that? Because I saw a few of the videos. It's like, and you come in like, you play the role, right? You put on the hat, you do all the bling, all the ching, all the. How did that start?
It started 4 years ago, was the first one, and I was having a conversation with Nick Lamparelli, and quite frank, I don't remember how it first came up, but I had done some goofy fun stuff like that in the past, and I thought, what, let's give it a whirl. And so I kind of did that first one in collaboration with insurance nerds, and didn't really have, I was more scared to put myself out there than I was excited about it. I was kind of nervous about how it might be perceived. And in that very first one, I had kind of given a shout out to Rob Galbraith because he had just released his first book, The End of Insurance as We Know It. And so I had kind of given him a nod in the music video. And so Rob kind of picked it up and ran with it, right? And so he was doing the circuit with his book. And so he was playing that everywhere that he went, and was speaking on his book release circuit. And so it got around, and that, quite frankly, at that time made me even more nervous, because I was afraid that some of our existing carrier partners might see it and recognize me and think, who in the world, what is going on with Curtis? He's gone off the deep end. And that did happen. It got around, and I was on a call a couple months after with one of our large carrier partners, a national company, and the director of underwriting said, "Hey, Curtis, I saw a video of you at a conference recently," and I thought, oh no, this is it. They're going to drop the hammer. They're going to cancel our contract right now, and it's the end of the road. And it was just kind of an awkward pause, and then he said, "That was awesome." And
first of all, you do that with great talent, and it's funny. It's I think that I love that, because it shows a little bit of more spark. We are insurance is very conservative, and from time to time we need extra stuff to push it a little bit forward. It's fun. It's it's great. I love that. It was yeah,
and it's been nothing but good ever since. This past year was the fourth one, and we've tried to raise the bar a little bit each year on the the production value and whatnot, and we've already got plans for next year, so I'm excited about that. It's going to be
that's cool.
It's going to be special.
Are you editing your own videos, because you have a background in video editing?
Yeah, I do have a background in video production, so yeah, I've done pretty much everything on all these: shooting, editing, the whole 9 yards. So It's I enjoy every part of it. It's a lot of fun.
Oh, cool. Okay, my dear friend, sadly, we reached the end of our conversation. We can talk for hours, I'm sure, more about, the second street at ITC, the one that had the other stuff. So I'll ask you the last question that I'm asking everyone. Can you provide a tip or a word of advice for your younger self or to the audience that is entering the insurance industry?
I think two things I would say, and this was kind of a theme at ITC this past year, but I was talking to someone who had reached out to me yesterday, an InsureTech startup that's kind of trying to get into the space, and we were chatting for a while and got to the end of the call, and I said, asked him for the spelling of his name. This was the first time that we had met. I didn't know him. I said, "What's the spelling of your name? I want to look you up on LinkedIn." And he said, "Oh, I'm not on LinkedIn." And I was like, "That's a problem." So I said, "You need to get on LinkedIn because there is an immense amount of connection and work happening there that is immensely valuable." So I think that would be the first thing. And I'm just starting. I that is first thing in my mind because I'm kind of just this year capitalizing on that for the first time, and it's been incredible for my business and it's been incredible for networking. And so I think that would be the first bit of advice I guess that I would give is get active on LinkedIn. I follow Gary Vee's advice in that regard. But then beyond that, don't be afraid to put yourself out there, right? And I think I see a kind of a growing wave of that. And, whether that's LinkedIn or elsewhere, right? There's a very active, insurance and InsureTech community on Twitter, right? And on Instagram. And I know that, all of those platforms together can be overwhelming and can take a lot of time that, a lot of founders and startups and folks maybe don't have, but, you can't discount it, right? I think that everyone should be at least on one of those platforms. And certainly right now, I think LinkedIn is maybe the most beneficial to be on. And don't be afraid to put yourself out there, post your ideas, right? Post content. It doesn't have to be video. But you've got to be willing to put yourself out there and talk and share. Everyone's ideas have value, and some people's ideas may be better than others. But the value comes in the conversation, and those conversations are happening at large, on LinkedIn and on these other social platforms.
Unless you're Ema, who mastered TikTok and all those short reels that I think it's Instagram, and she knows how to do that.
Emma is in her own category. Yes.
Yes. Kudos to her. Curtis, thank you very, very much for joining me today. It was a pleasure chatting with you.
Thoroughly enjoyed it. Thanks so much. Let's keep in touch.